Well, good evening, everybody, and welcome to the February 2025 Investing Roundtable. This is Ken Kavula with the Mid-Michigan chapter of Better Investing, and I'm joined tonight by two of my good buddies, Mark Robertson, who's a director for the Mid-Michigan chapter and the chief officer and everything else in Manifest Investing, and Lynch, who's the former board chair of NAIC, also one of my good buddies from the Atlanta area. And the three of us tonight are going to constitute the panel of knights that will give you some stock picks. But tonight is also our 2024 Roundtable Golden Knight Awards presentation. So we're going to spend a little bit of time giving out some awards for some of the better choices during the very last part of 2023 going into the year 2024. And I think you'll find them entertaining and even give you some ideas for stocks that are doing really well recently, at least. We also have with us many of our presenters that have come back to us, and they've been here for us over the years. We have their pictures across the top there, from St. Louis's Candace Baker all the way through the Rocky Mountain chapter, Betsy Wills, and all the folks in between. You can read their names. They are in the same order as the pictures in front. So if you want to know who somebody is, count the pictures, count the names, and there you go. Cy is right smack dab in the middle. Mark is 3 from the right, and I'm 5 from the left. So you can see us. That's an old picture. I look much more svelte now, Mark. So I'll have to get you a new.
We'll get.
Okay.
We'll get new footage in North Carolina when we're there.
New footage, okay. So let's go to the disclaimer really quickly. Everything that we do is for educational purposes, folks. And we're illustrating all kinds of different things about investing. Take it for what it is. These are ideas. These are examples, but we're not recommending that you buy, sell, or hold anything. Those are decisions that you must make on your own. If we do own one of the stocks that we're talking about, we will try to disclose that when we're talking about it, but don't get too angry if we forget in our eagerness to share with you what we know about a particular stock. If you'd like to be added to the Mid-Michigan guest list, then if you ask for the slides, and you can get a copy of these slides by sending an email to Mark R. at manifestinvesting.com, and Mark will send you the slides right back. If you then go to this link that we have right above Mark's email address, this betterinvesting.org link, it'll take you right to the Mid-Michigan chapter. And if you scroll down the front page, you'll find a subscribe button. If you hit subscribe, then it'll ask you for just 2 pieces of information. And if you hit subscribe, then it'll put you on our guest list, and it will allow you to have us tell you about the roundtable and when it's going to happen, and give you a link. So once a month, you'll get a single email from us. We will announce the roundtables coming up, give you a link where you can register, and then we'll leave you alone for another month. That's my email below Mark's, and I would be glad to answer any questions or engage in a discussion with you. If you want to send me something, remember, I'm a volunteer. I don't have any other occupation except to sit at the computer sometimes and play with investing. So if I get back to you in a day or two, that's going to be pretty good timing as far as I'm concerned. Here's the roundtable performance, folks. We've been doing this now this is the end of is this the end of 14 now, starting on 15? Is that the way it works, Mark?
I don't know. It's 14-ish. Yeah,
I think we're
coming up on 15.
Yeah, we're starting our 15th year tonight, I think. And we've been keeping track of this portfolio since the very first time we met with you back in February, a long time ago. Our goal has been the same throughout. We're going to keep track of all the stocks we pick in the round table. We're going to put them in a tracking portfolio, and we're going to try to achieve a relative return. And relative return means above the market. We're going to try to beat the market by about 5 points, and we're going to measure the market by using the Wilshire 5000, which is a really wide, broad-based index of 5,000 different stocks that are traded, publicly traded. Our goal also will be to have about 55% of our choices accurate by beating the market. We'd like about 55% of them to do that. We've learned by reading some of the different source material that we've gone over in the last 15 years, we've learned that even the very best, and we're talking about Roger Federer, for example. He's a tennis player, not an investor. But, you know, Federer only won about 55% of his games. And yet he was one of the greatest champions in tennis the tennis has ever seen. Tillinghast talks about investing, and Tillinghast tells us that if you can be 55% accurate, you're going to have a really good record as an investor. Our rate of return most recently has been 17.4% annualized for the past 14 plus years. Meanwhile, during that same exact period of time, the Wilshire 5000 has turned out 12.8% annualized. You subtract those two numbers, you get 4.6%, and that most right blue dot on the graph represents that 4.6%. For the first time in a couple of months now, we're climbing back towards our goal, which is that orange line. That's plus 5% to the market. We'd love to pop over the top of that line before, but I'm feeling much better when we're close to it again. We had sunk below the 4% mark last month, and it happens to us occasionally, but we're working really hard to try to keep it up there. Our accuracy rating is 48.5%. And I know that doesn't sound very good when you're missing more than half of the stocks you pick, but that's actually a fairly decent accuracy when you look at the investing public, especially when you consider 55 to be exceptional. So, Mark, have I missed anything on this wonderful slide that we see every month? Anything at all?
Just one tiny correction from a tennis player. Federer actually won 55% of his points.
I remember that now. Okay.
But he
Yep.
won like 83% of his matches.
Okay.
So that's the difference. And Federer's going to be back in a few minutes here as we talk about programs from the past and awards and all that kind of thing. I will say that
foreshadowing, great.
they're gonna think we had a plan here, Ken. Be careful.
Right.
No, good stuff. I think some of the holdings in the portfolio have been feeling a little bit of downside pressure, and it sure would be nice if our Delex would help out a little more. Here's the portfolio.
Yeah, here's our top 20, folks, and Microsoft is more than twice number 2. We've picked Microsoft 5 times, and at the time of this screen capture, Microsoft was worth over $100,000, those 5 picks. We don't talk about booking holdings very much, but we've held booking holdings for many, many years. We picked it back in the day about 11 different times. It was a favorite at one point, but booking has recently done extremely well. It had some absolutely wonderful days, and the reason that I know is that I still own booking in my wife's IRA. So we follow it, and booking is the largest booker of hotel rooms and airlines and vacations in the entire world. They run hotels.com plus a lot of other brand names that you would recognize. And Booking Holdings is quite an exceptional kind of stock to take a look at. It's trading at more than $5,000 a share. That's a per share price, that $5,000 number right there. So at some point, I would expect that my 10 shares of Booking Holdings in my wife's IRA are eventually going to split off and become a lot more than that. Remember, that's nothing more than making me feel a little bit richer. You're not actually any richer, but you feel kind of nice when the 10 shares becomes 100 or 1,000.
Well,
So.
Ken, I'm wondering if Herb Lemkool would like to do a victory lap over NVIDIA. As I know he's with us tonight. Does he have audio equipment? That's the question.
Herb, can you talk to us?
Because
you gotta unmute your. There we go, Herb. We can hear you. Okay.
Hey, Herb.
I'll tell you flat out, Herb. The first time you picked NVIDIA, I thought you were a little bit off base. Okay.
Well, Herb, I was just going to point out that you've done what Ken did with Booking with like just 2 positions in NVIDIA.
Yep. So, but I just want you to know that my AI is Ken and Mark.
So you know that's a bunch of fantasy.
And it's 3 positions in NVIDIA, Mark. Come on, let's not exaggerate, okay?
Well, it's a team effort. It's a team effort, Ken.
All right. So we have the top 20. The portfolio is much larger than this. If you use that URL at the top of the page right there, it's a public dashboard, and you can see the entire roundtable portfolio if you really want to take a look at it. It's there in its entirety for you to take a look at whenever you need to. All right, let's move on because we have a lot to do this evening.
I just wanted to do the Ken Kavula moment and just point out that par is okay, but it should be a little higher. The quality's fine, and the growth rate could be just a tad higher at 11.3. We'd really like to see that at 12 or 13. We'd like to see this 12 at 13 or 14 also. So,
and Mark, I will make the point that a lot of our stocks that were growing much more quickly when we placed them in the portfolio, the growth has slowed considerably. I mean, we might look at EPAM, for example. I know that EPAM was not chosen with a sales growth rate of 4.5%. So that things have happened. We have Cognizant up there with a growth rate of 5%, and I know it wasn't chosen with a growth rate like that, but over time things change sometimes, and it might be a nudge for us to take a look not only at the other end of the chart, but maybe at the end of the largest holdings as well, to see if we need any pruning or any retiring from the list to help out our growth number and our par number as we move forward.
Well, I would invite Cy to comment on EPAM because I think they went through an existential crisis, and they answered the Cy Lynch question, is it temporary or terminal? Any comments, sir?
I would affirm that. I think EPAM, to a great extent, Cognizant as well. And of course, we don't see Infosys on here. I can't recall. I own a little bit, but I can't recall if it's suffered the same sort of thing. But that whole, consulting, outsourcing of IT industry is still really being beaten up by the just the pessimism over world economy and expansion. But EPAM in particular kind of exhibited that. If we picked it a few times when it was facing that existential crisis, the war in Ukraine, because much of their labor force was in Ukraine and Eastern Europe, and they survived that and actually did extremely well. But then after getting through that consequence, they have fallen by another 40-50% as the industry has been hit. So
it's a never-ending challenge for all of those companies. That's for sure.
Exactly. And Cognizant is bumping up while that growth rate there is pretty low. Cognizant, after languishing for 2 or 3 years, is bouncing up near all-time highs again. So
Yeah, and showing signs of speeding up a bit again too.
right. So,
Right, thanks.
Mark, I'm going to take a side trip real quick to answer a question for Steve Emmerich.
Okay.
Steve, I saw your note to Candace Baker, hoping she was in the back room, but Candace is not with us this evening, so you're going to have to try to reach her some other way.
Okay. All right. So with that, can we go ahead and knock out these awards?
Yes, we're on the red carpet and we're ready to hear what's going on, Mark.
All right. So we've got 7 awards that we give out. The first is the best stock selection for the. Again, it's not exactly a year. We go back about 15 months. Go back to the previous Halloween, roughly. And again, just for posterity's sake, you can see the winners from the individual years. I mean, I had forgotten Walgreen was a winner back in 2010, Ken. Apple's a couple-time winner. Herb with his Tyson. Ardelyx a couple of times. Five Below, Psy. That was a classic moment. I mean, I can almost remember it like it was yesterday when we're sitting there thinking, well, they're closing all their stores, Psy. And he's picking it. And sure enough, they opened them back up and did pretty well. So, and then Ken, your Fabrinet, that one was out of nowhere, in our opinion. Good pick. Good pick.
And then you have Priceline there in 2013, which that's the booking that Ken was mentioning earlier.
Yeah, they changed names, and Cy and I both thought we had a great idea that we were keeping to ourselves, and we both brought the same stock to the round table that night. So we'll take it, you know.
Seconded by the audience. So the best pick for the most recent year was by Herb. One of his selections of NVIDIA. It's actually up 100% versus the market since November 2023. So Herb adds another notch on his belt, and you can get a pretty good look at some of the more interesting selections made last year. You see Matt Spielman checking in there, Size in there a couple of times, and Manning. Candace Baker checks in at the bottom down there. The good selection. Keep in mind there's a bunch more picks below that. Kevin Gologly had several successful forays into a wonderful contribution. And Shockwave was a company that was actually bought out. That's actually a Matt Spielman idea, I believe.
That ODD next to Kevin's name, that's a stock ticker. That's not a comment, right?
I think the jury's still out on that, Ken.
Okay.
I'd appreciate that, Ken.
You're welcome.
All right, so congratulations, Herb. All right, the second one that we'll take a look at is best selection all time. And this basically can be any pick all the way back to 2010. And it's a running tote board. And I don't want to say I own this category here lately, but I kind of own this category here lately. and it's an interesting way to retain the leadership position. With Ardelyx falling back, Universal Display bubbled back to the top, and I get credit for Universal Display one more time.
We have a hand in the air, a comment from our friend from St. Louis, Fred Tonys. Fred, sure. I'm going to unmute you. You have to unmute yourself, Fred. You're muted on your end. So if you unmute yourself, Fred, you can talk. There we go.
I just want to let you know that Candace is on the way to Mexico. That's why she's not on.
Ah.
Okay. Could you get a message to Candace when she gets back, Fred?
Yes.
Could you try to tell her to get a hold of Steve Emmerich in Heart of Illinois chapter?
Okay. Yes, she's working with them on something. I forgot what it is.
Right.
Okay.
So he would like to talk with her when she gets a chance. Okay.
I think they have been talking.
All right. So this is our old-fashioned message board here. So thanks, Fred. And Mark, why don't you continue, okay?
It's the network. Well, again, this just kind of underscores some of the really solid selections that have been made over the years. And you can see the plenty of green ink on the far right-hand column. And Herb is still lurking there with his active position in NVIDIA.
Well, our friend Matt, who I'm moving to the back room right now, says,
He's
what
with
a
us.
year when 63% comes in third place, you know?
Exactly. That's when it's a lot more fun. Okay. All right, here's that accuracy thing. Again, we're keeping track of how often the selections made by individuals outperform the market. And you can see there's been quite a smorgasbord of winners here over the years. And it's a statistic we're actually pretty proud of because we run in that 55 to 60% range collectively pretty much all the time. And the winner for this year, even though we had a little bit of a tougher year when it comes to accuracy, Ken, you need to dust off that space on the mantle, room for another golden night with LPL Financial, that's a September 24 selection, so it doesn't have a whole lot of runtime.
Well, but it's been running fast, I'll tell you. And I wish that I would have bought it at that point. So it's as simple as that. I didn't, but I wish that I had. I did buy Excel Services, however, and that's been a real pleaser for me.
So welcome.
So this is the Kavula board. Is that the way I'm reading that table over there?
Right. Those are
these
10
are my
selections
choices during the year.
It basically demonstrates that he had 10 winners and 7 that came in under market. So that's actually pretty good performance over the long term.
Very good performance. Congratulations, Ken.
Well, thank you.
Good stuff.
Thank you.
Look how he's leaning on those medical device companies and doing it well.
I will tell you, Mark, when I got closed out of this category completely a couple of years ago, I decided I was going to go back to my old-fashioned up, straight, and parallel, and they have really worked for me this year. So I'm going to stick with them. Okay.
Good stuff. All right, the next category is same thing, accuracy, but all time, going all the way back to 2010. So you can see that there, again, this has been kind of dominated by Kim and Hugh with a couple other guest appearances. So with no further ado, Hugh is back. Hugh is just a beast. His all-time accuracy now stands at 65.8. The other unusual thing about Hugh's entries is they're all closed out from top to bottom on that list. That's why they're shaded in. You can see the beginning and end dates of all the transactions, but he has quite a track record. Wish he could have been with us here tonight. He is once again traveling on business, probably to Dubai or India or someplace like that.
Oh, I'm actually here.
Oh, you are here.
Yeah.
Well, congrats. Yeah. Well, I'm glad you're here. Congratulations.
Well, thank you.
Are you?
Yeah, I just got into a hotel room.
Okay.
Yes, I'm in Northern California this week.
Well, Hugh, you're pretty dominant in some of these categories, so try to control yourself. But congratulations.
Will do. Thanks.
All right, so let's talk a little bit more about, again, this is called Best Picture, but it can be any topic. And I told you Roger Federer would be back. This is one of my favorites. I mean, I love looking back and seeing, what did we receive the most correspondence on? How many page views? You can look at the YouTube and see how many times things were checked in on. And as you go down that list, there are some absolute classics you can find by just searching on the title. You can find these old ones. And I'm not saying this because he's here, but 2011, Hugh's presentation, More Spock, Less Kirk, is absolutely priceless and timeless. And that's just an example of one of the programs. We do give Ken credit for that first entry there. One of the best presentations I've ever heard in the history of investing for a company that didn't exist. But good fun. And of course, Matt Spielman's our introduction to Air Lease was literally Matt showing the footsteps of the guy walking out of a competitor's office, walking across the parking lot and starting Air Lease as a competitor. And that was a wonderful thing. The Jim Bowen presentation from 2017 was pretty solid. Hugh's presentation on FDA pipelines is one of the most frequently viewed YouTube videos that we've got. And it was our first introduction, I believe, to Ardelyx back nearly 10 years ago. So good fun. And then we honored Kevin a year ago. Absolutely solid presentation on the semiconductor industry. And it was a fantastic review and some of my favorite programs from the past. So Roger Federer was a candidate to take this one away, but he gets a runner-up award, and for the reasons that you heard just a few minutes ago. And then this one was part of a presentation by Ann Manning. She was talking about Gentex, but she was using it to illustrate the notion of, Gentex sells to just about all the automotive manufacturers. Back in the 1960s, the Mutual Club made a pretty big deal about investing in, I believe it was Corning. Rather than try to identify the single television company that might come out ahead and win, their logic was, well, why don't we just go with the company that sells to them all? And same thing kind of applies to Gentex. I thought that was an outstanding moment also. But my favorite is actually the contributions of all of us. And I'll let Ken take this one away. This is our best picture for 2024. Go ahead, Ken, and describe for the audience what this is about.
Thank you. This slide, from my point of view, has changed a lot of people's minds about whether investing is a crapshoot or not. This is the slide as it first appeared, and we talked about 855 selections made by the roundtable since 2010 with a rate of inception of 17.4%. We've updated the numbers, but the slide looks the same. Of the 855 selections that we've made, putting in $1,000 each time, 275, or about a third of them, today have values of less than $1,000. And that cumulative loss for those 275 positions is $81,000 and change. The unrealized gains from 5-time selection Microsoft, we put $5,000 into Microsoft, and Microsoft is now worth $93,000. That means the gain was $88,387. That wipes out the cumulative loss from the portfolio, and all of the other gainers that you see in the portfolio then are there that we can count as profit going forward. It's a staggering fact for me. It's life-changing for a lot of people. And when we present this to non-better investing groups, the room goes silent. And then the questions start coming at us from all different parts of the room as to, well, what are we doing? How are we measuring? Are you picking individual stocks? How can you do that? People can't make this happen. And yet here we are, a group of 10 or 12 or 14 different people that over the years have been picking 3 or 4 or 5 stocks a night, once a month, for almost 15 years. And we've made money doing it, and we've made good money doing it. So Matt has asked us to add a little bit to this slide. So Mark, one click.
Yeah,
and we'll let everybody in the audience read our new addition to this slide.
Yeah, Matt suggested this, so Matt, feel free to comment.
Yeah, I think I agree with, maybe in the end, the highlights are what make it. This is from Warren Buffett's latest letter, just came out this weekend. And of course, he has held things for decades, and they've been long, and he stays with his positions even when they don't look exciting to a lot of people evaluating them as new investments. But I think it's the gist, the spirit of that same slide, right? That first of all, that single decisions or very small numbers of decisions can have an outsized impact, which is kind of the rule of 5, combined with the skewness, the fact that at most, we're not leveraged, so at most we could lose 100%, and that's unlikely because you get out before then, and at most you can win infinite percent, right? So if we were, is accuracy still in the high 40s? Is that still under 50%?
Just barely under 50, yeah.
I've used looking or talking about old slides, I've said if we were flipping coins to fund our retirement, we'd be losers, but we're not, because you can win forever if you do well enough. And then the slightly more poetic ending: mistakes fade away, winners can blossom forever.
Absolutely. Thanks, Matt. I think it's a great addition to that slide. All right, let's go ahead and
Okay,
close.
Mark.
Yeah, go ahead.
Okay, I just want to say that I personally am thankful for Ken doing the pork presentation when he did, because it pretty much told us we don't want to buy Chinese stocks.
He still doesn't.
Right? Oh, I don't either. I bought hog, but that was the only one.
That same feeling, and I bought 2. I bought hog and I bought NetEase. NetEase made me some money, but I moved away from it as I learned that hog didn't exist. So
Right. Yeah, but we learned our lesson.
Yep.
Tuition at the School of Hard Knocks.
All right. That was, for those of you that aren't familiar, that was Ann Manning from Houston also. So Matt and Ann, and they make quite a team down there in that Houston area. Thanks, guys. All right, let's close out with a couple awards here. Best annual performance. Again, this is just the individual performance in a particular year. And again, it's a category that's been fairly dominated by Hugh, but it looks to me like we've all pretty much taken turns year in and year out. I can tell you I was not a threat to win this one this year. And I'm not going to tell you how well. And the winner is, you hear him laughing. Ken actually checked in with a relative return over 5%. So he takes home the best annual performance for 2024. And again, those medical stocks, and he's frustrated with Louis Vuitton and Schlumberger, but they'll probably be okay in time.
Well, so it just shows that every 12 or 13 years I can strike it rich, Mark. Okay.
The
long-term perspective. All right.
Ken and Mark, I just sort of want to point out, if you go back to that slide,
sure,
this gets to what you guys were just chatting about. Look at how bad Five Below is in terms of its return, and yet Ken was still the best because of all the others that were just so darn good.
Absolutely. Look at that LPL Financial. It's only been around for a few months. Just amazing. Thanks, Kevin. All right, and our final award, it's kind of like the award when they're playing the music at the end of the night, the last award after Best Picture and Best Director, whatever, however they do it out there in Hollywood. This is basically the best total return performance since inception. And Herb is the defending champion, but Mr. McManus took back the lead again this year. Even though he's only got a few open positions in the portfolio, the closed out ones are doing extremely well. And I don't know, Hugh, but that plus 10% is something to celebrate and be envious of on our part. The 2 dogs there are Hugh's Irish Wolfhounds, Boo and Ka, and sorry about the loss of Ka, Hugh, but
Yeah.
they had a lot of spirit.
Yeah. Well, which company is that?
Which company?
That has the plus 10.6% over the market.
That is basically your total return performance versus the market.
Oh, okay. Sorry. Yeah. Gotcha.
Mm-hmm. And we're just showing some of your longer term results down in the lower right. And
well, I do like to buy things at a 52-week low if I can.
So you're back on top of the heap. And Hugh, I thought we would use that as an introduction to a topic. We're just going to touch on it here tonight, but didn't know you were going to be here. But if you want to expound on this a little bit, you are somewhat infamous for this notion of finding a stock that is loathed and going after it. And we noticed the Walgreen back that you basically brought to the portfolio in 2011, 2012. You can see the price chart on the right there. It was definitely a company that was being problematic at the time. How do you think about these things? How do you find the courage to invest in a stock that is truly loathed?
Well, practice. So that would really be it. And looking back on what has happened in the past, because if it's a good company, the engine is sound, it always bounces back. Back then, it was a little bit exceptional with Walgreen because they had an argument with the pharmaceutical benefits management company, and the name is escaping me. It's dominant in the industry. It's clearly
Scripps.
Yeah, it should be split up. It's crazy that the industry structured like that. But that's a different topic. But the bottom line is businesses are in the business of business. So it was approaching, as you recall, the annual meeting for Walgreen, and their stock had plummeted because these two guys, the revenue had dropped by just 5%, but they were fighting about reimbursements. And I knew they were going to kiss and make up before the annual meeting. No one wants to go to an annual meeting to hear people scream at them. So, yeah, so they did, and the rest is history, as they say. Now it looks rather unhealthy, but that whole industry
Well,
is going through a bit of a challenge right now,
I do think it might be worth a future moment for us to sit and, I mean, CVS. I mean, talk about a very similar company. They're trying to reinvent themselves. It doesn't seem to be happening as fast as most of us would like. I mean,
Yeah.
is there a point where you would say CVS has a functional engine? Again, I'm just, thinking out loud.
Yeah, I haven't looked at these companies for a while, but this is going to prompt me to go back. This slide will prompt me to go back and look at it again.
Yeah. Again, topic for another time, but you see some of the hedge funds and private equity firms coming into both Walgreen and CVS. Just wonder if there isn't an opportunity for some renaissance there. Now, Sai has actually brought CVS back to the roundtable portfolio, and he believes that they're at least making a genuine effort to remain viable.
That's a real bounce in the just the near past, right, Mark?
Yeah, that's the private stuff. That's the hedge funds and equity people basically coming in, and on the right hand side of the price chart there.
Right. So that you have a significant bounce going on right now, and maybe that's indicating looks like a bottom, maybe in October, November, December sometime, right?
So this definitely qualifies as loathed in my book. I mean, I sold my CVS not long ago, right before it bounced up.
That's why it bounced.
There you go. I sold my shares to these opportunities. Anyhow, just a topic I think we might want to try to dig into a little bit more carefully, and of course, celebrate your 52-week low Irish Spring stuff and that. Sai, did you have a comment?
I was just going to say, I mean, CVS is going through much the same thing, but the chart we're looking at is Walgreens.
Oh, definitely, yes.
I would still assert too, and it's hard to chart it because it's not really a category. I think one of the things I've seen that distinguishes Hugh's approach is his willingness to pass on a month.
Yeah. Yeah, there have been times when he said, "No, I don't see anything I'm interested in." So that helps too.
The Charlie Munger method of sitting on your butt.
I don't want the rest of you to think about that though, because if you all pass, we have no program. Okay.
All right, so we'll put a lid on this, but I mean, I am reminded of him presenting pictures of the leak off the Deepwater Horizon for BP and explaining when it was time to go in. Remember BP? Talk about a loathed company at the time. So it's just a fascinating way to think about things.
Yeah, because in anything, the bad news is rarely as bad as it first seems, but conversely, the good news isn't as good as it initially seems either. But you
Absolutely.
saw with BP when it was polluting the Gulf, that the turnaround when they solved that, it was really rapid, you know.
Mm-hmm.
Well,
But
Mark,
now it's not a, if you don't have a chart of BP, but it's a mess right now, as many are.
Yes.
I think the other rule, Mark, that even this very short list might point out is that you really need to take advantage of markets when they turn against you. So many of Hugh's best performances were when the market was going the other way. Look at that market return column and how red it is.
Yeah.
You know, so that
Yeah.
you have to be strong enough to not get afraid when the market's doing things like it's been doing for the last 4 or 5 days, and when all the folks on CNBC are setting their hair on fire. You have to keep that in mind, that some of your best opportunities are going to occur during these negative market times.
And one last
Yeah.
salvo across the bow. Those of you that have beat me up over the years on emergent biosolutions, I would just encourage you to go back and look at that 298% performance the year before.
Why don't you just go yeah and turn the slide, Mark? Okay.
All right.
Let me add something back on what Ken was talking about.
Sure.
You know, we have these quotes from Warren Buffett. One of my all-time favorites is about 20 or 30 years old, and he says, "Be fearful when other people are greedy, and be greedy when other people are fearful."
Exactly.
And I think that's an excellent way of sort of synthesizing sort of what our value approach is.
Yeah. And it comes down to, if you think, and all the way back to size thing about, is it temporary or is it terminal? And is the engine still functional? All those things tie together into an interesting mix, and it just takes discipline to stay there. All right. Let's go ahead and move on. Let's go with our stock presentations for the evening, starting with Ken and MedPace, one of our best small companies for this year.
Well, I'm going to present MedPace in just a very few slides. MedPace is, in my mind, one of the most interesting companies I've ever taken a look at. It's a CRO, and that stands for a contract research organization, and it enters into contracts with small biotechs, medium-sized biotechs, large biotechs, and other companies outside of the biotech industry, but it enters into contracts to do specific tasks. And when it enters into biotech contracts, basically it says, we will run for you the drug trial for, and then you fill in the blank for the name of the drug that you'd like to run through the drug trial. They'll handle all the compliance issues, they'll handle the legal issues, they'll handle the scheduling issues, and whatever else that takes to make the drug trial run smoothly and get results that can then be analyzed, and if positive, help you get that drug ready for sales at some point. You got to run through drug trials a couple different times before the FDA, I think I have the right government agency, before the FDA will finally give you approval on the drug. And that's what MedPace does to make money. So let's look at the first slide, Mark. They feel they have a disciplined, integrated, full service, and that's the key to what they're doing, operating model. They do laboratory work, phase 1 clinical trials, CRO, again, contract research organization, and they have technology that has been built especially for the contracts that they're signing with various people. This is how this company operates and how MedPace makes money. Ticker MEDP. Next slide. By therapeutic area, about a third of their business is doing drug trials for oncology. That's the fancy name for cancer research. About a fifth, 20%, is in metabolic drugs, about 10% in cardiovascular. AVAI is aortic valve drugs, and these are drugs that deal with the aortic valve, and CNS is the central nervous system. So another 20% about of the business is with the heart and the nervous system, and then the last 20% or so is in smaller chunks. MedPace is about 5% of the small and mid-sized biopharmaceutical market share. So there's a lot of room for growth in that market for MedPace. They're a relatively small player at the moment. And you can see that their customer mix is made up of about 3/4 small biofarms, about 1/5 mid-sized biofarms, and less than 5% in the large pharmaceutical companies. Now, they also work with different customers outside of biopharmaceuticals. So don't get the idea that all they do is what this graph suggests, but it's a huge part of what they do. What's also very interesting is that there's not a single customer that monopolizes MedPace and their workers. You can see that the top 5 customers take up only about 23% of their business. The rest of the top 10 take up only 7%, and all the others take up the other 70%. So they have a nice spread in their customer mix. So the loss of a single customer will be hurtful, but not probably terminal to what they're doing as a company. Next slide. They're a global company with about 6,000 employees. And frankly, when my clubs bought MedPace, and then when I followed suit and bought some personally, I didn't realize that there were as many employees to this company as there actually are. And I didn't realize the extent throughout the world of the company, the reach that the company has. You can see by the kind of aqua tinted places where they're active, and the red dots are their offices. They don't hesitate to go to Southeast Asia, to the subcontinent in India, to most of Europe, to the larger countries in South America, to Australia, and of course to North America, including Mexico and Canada. They are truly a global company and doing a significant amount of business outside the United States. Next slide.
I was going to say that's probably a Hugh McManus pin map.
Could very. Oh, it's his flight travels in the last 6 months. Okay.
At least.
They have future growth confidence. They figure that biotech will continue to be the fastest growing segment of their business. And they're really trusted by these biotech companies. They seem to be at the top of the list when it comes to a company looking for a contract research organization. And again, I'm stressing the fact that they give a full service solution when they sign the contract. They don't do just pieces, they do the whole thing when they say, this is what we will take over for you, and here's what we will give you when we finish the study. We'll give you the results, which you can then use. Next slide. One more slide, Mark. There we go. I like the up, straight, and parallel nature of the company. They certainly have consistent growth over a long period of time. A manifest suggests growth at about sales growth at about 18.8%, and gives an EPS value at the end of 5 years of 24.87. If you look at my SSG, you'll notice that I'm suggesting sales growth at 14, and I'm giving a 5-year earnings number of 24.32. So I'm certainly in the same ballpark as Manifest, but I'm a little bit on the more conservative side. Morningstar suggests growth of 14.7 for earnings. I'm going to choose 14% for earnings. There are a number of other sources that are still within ranges. I don't like those estimates, those open dots that are right there. And I'll tell you what I think is happening. They had a bang out fourth quarter, MedPace did, and the fourth quarter numbers are much, much more aggressive, especially the earnings number, than anybody anticipated. They grew earnings at almost 50% in their fourth quarter. I don't think that those Morningstar estimates have caught up to the end of the fiscal year yet. And because I don't think they've caught up, I'm not really worried about the fact that my dotted lines appear to be over the top of the earnings dots. I think that as we move a little bit further into our data, that those dots will catch up with my line, and we should be in a pretty good position. Again, the earnings in the fourth quarter for MedPace were just exceptional, and the price took a jump in the right direction. And I was very pleased as an owner. You get 3 greens down there for evaluate management, pre-tax profit moving in the right direction, return on equity being really very, very good to superb, and all doing it with very, very manageable debt, less than 15% in the most recent year. Turn the page if you would, Mark, or next slide. Here's the preferred procedure that I used, and my preferred procedure indicated that earnings could be growing as fast as 15.7%. Again, I've chose 14. I've tried to stay on the conservative but reasonable side of all the numbers. Next slide. When I put those high PARs of 32, high PE values of 32 and 17 into the SSG, that gives me an overall average PE of 24.5. Both Value Line and Manifest suggest a long-term average PE of 25. So I'm feeling pretty good about my 2 choices of average PE. Now, of course, I can get a 25 average by raising that PE quite a bit and lowering the low one quite a bit. But I don't think I'm wild and crazy with that 32 and 17. Those judgments that I've cited give me a buy with a 3.5 to 1 upside downside and a potential price appreciation of more than 100%, which is something that I like to see in some of the smaller companies that I invest in. Next slide. Here's this SSG summary. I can expect if all my judgments come to fruition, or if things work out better than I've decided, I can expect a return somewhere between around 12 to 18%. It's certainly in the same ranges as the other sources. I have Value Line showing price appreciation between 4 and 15, a little bit wider, but my 12% par is certainly within that set of numbers that Value Line has given us. And I have MedPace from Manifest coming out at 12.8, and I'm comparing it against my 11.9. And I'm feeling validated by the study I did. I think this is an extremely interesting company that is unknown to an awful lot of people. And I'm going to suggest we add $1,000 of MedPace to the roundtable portfolio.
Cool. Thanks, Ken. That's a Cincinnati company, right? Aren't they out of Cincinnati?
I'm going to have to plead ignorance. That's one thing I don't know.
I believe it is.
Yep. Good stuff. All right, we'll hold questions and come back. We'll probably have a little bit of time at the end to address any audience questions, but let's go ahead and turn the page to Taiwan.
All right. I am presenting Taiwan Semiconductor, which I guess is my stock of 2025 in January.
He's on the chips now.
Exactly. I was going to say I'm playing off the Getting Chippy presentation of a year ago. And Taiwan Semi, in some ways, is a little bit like MedPace in their industry that Ken was talking about, in that MedPace is a contract research organization for drug companies, Taiwan Semiconductor makes chips for the designers and sellers of chips. They don't design or market their own chips. They make chips for other people. As you can see, pretty much up straight in parallel, a little bit of hiccups here and there, but again, that's the semiconductor industry generally is a little bit rocky at times, but you could see very much a growth trajectory over time. Next slide. I've got a few more slides than Ken, but I'm going to go through most of mine pretty quickly because we're just looking, since I've done Taiwan Semi last month, and I believe several months ago in 2024 as well, and most of us at least have some idea what they do. We don't need to deep dive in the company. Let's just look at some of the numbers. I wanted to pick a company that was in the portfolio right now, so I ranked by par, and you could see a couple of companies that I follow and or own pop out here, and Taiwan Semi and Gentex are both right neck and neck there in the par rankings, with also very good quality rankings as well. Gentex is in the grab at the bottom of the barrel. They're selling at 52-week lows. Again, if you've heard anything about concerns over the economy, concerns over potential tariffs and the like, you understand disruption in the auto industry. But that's certainly a stock that's down and has some potential. I decided to go a little bit on the other end with Taiwan Semi, a much higher growth. We'll see the growth in more detail in a moment, but we were talking earlier about boosting the par and boosting the growth. Taiwan Semi helps us do that. Next slide. Here I just ranked the portfolio by par, and you see that there are by quality ranking. You see 5 companies have quality rankings of 100, and then of course others very close right behind, and Taiwan Semi's there. And notice very strong financial strength and earnings stability, which again I think bodes very well for this uncertain market and business environment that we're in. And you can see a little farther down, Gentex is right in there, as well as some of the other companies we've talked a little bit about tonight with Booking, NVIDIA, and the like. Next slide. Then I was looking to boost growth a bit, and so I ranked by growth, and you can see, again, Taiwan Semiconductor is certainly among the higher growing companies in the portfolio. And again, as you could see, among the blue-green, the excellent quality, and within the sweet spot, it's right in there with a few of the other companies. Next slide. So then I said, well, let's take a look at the industry. And here again, you could see a very high quality industry with 3 companies with 100 quality rankings, and Taiwan Semi is right there with NVIDIA and ARM Holdings, but has the best potential return of everyone on that list. So let's take a look at potential return. Whoops, did I say that backwards? One of these slides is old. I'll bet this is the current one, and the last one must be last month's, because I was using last month's as a template. And usually the second one is the real one, and I do see Rambus on this chart because it also had popped up as well. So this is the current. You saw last month's rankings as well. Next slide. That's just a double down that it continues to be very high quality and good return. And then now this is ranking by par by the return. And again, you could see it's the highest excellent quality in the industry for return, and Rambus is right in there. And I thought about doing a little bit more looking at Rambus, but again, Rambus is kind of stabilizing. They have been volatile historically, to say the least, if you take a look at them. But you could see from the manifest screens, that might be something to look at as well. But Taiwan Semi's up straight and parallel. Rambus would be much more frisky, a little too frisky for my blood right now. Next slide. Again, here's just a summary of what the company does. I already mentioned that they manufacture chips for other companies. That's, as they say here, dedicated chip foundry. Chip foundry is just the manufacturer of chips. They've had over 50% of the market pretty much since they came into existence. They were the first dedicated chip foundry, and Morningstar estimates that they've continued to have 50% since 2000. Also exceedingly strong gross and operating margins. The biggest risk for Taiwan outside of the semiconductor business risk, which is always there, although we all know that chips are in everything. They're in our cars, they're in our credit cards, they're in our phones, they're in our computers, the AI servers, they're everywhere. So chips are going to be around and going to stay around. But of course, you've got the geopolitical risk that their factories currently still are mainly in Taiwan, although they are building some in the US and they are diversifying there as well. But that's the potential risk for Taiwan Semiconductor, is the geopolitical risk. Next slide. And here's a listing of their products that they manufacture, as well as some of their big customers. And notice that most of their customers are the exact opposite. They they design and sell chips, but they don't manufacture them. And so Taiwan Semiconductor does that for them. And they are a technology leader, as we'll see in the next slide. Here's their fourth quarter fiscal 24 revenue by technology. And essentially, as those numbers get smaller, from the 28 nanometers NM, which is the size of the chip, down to 3, smaller is newer technology. In fact, last month I had an additional slide here that looked back 3 years ago to see the shift, and you would see that 3 nanometer chips didn't even exist. So Taiwan is the leader in technology as well. Next slide. Here's, again, essentially the investing business thesis for Taiwan Semiconductor. According to the company, they're the leaders in technology. They have manufacturing capabilities that are unequaled, and they're a wide range of customers and products that you could see. And because they are solely a chip foundry, they don't compete with their customers, which some of the other chip manufacturers or foundries, if they also design and sell, they're competing with potential customers. Next slide. And here is their breakout. I, of course, mentioned that chips are everywhere. You see high performance computing to a great extent. Call that AI, although that's broader than AI, but AI fits in the high performance computing arena, is about half their business, and smartphones is another third, and then you've got smaller um, shares in the other areas, and the overall market's expected to grow by 15%. Again, they're the market leader, so 15% or better growth is not unreasonable to expect for Taiwan Semiconductor. Next slide. And you'll see that that is what I'm projecting for my 5-year sales growth is 15%. And I come up with projected earnings per share of little over $13 $0.68, and the EPS would increase about 14% at that, right in line with the sales, which again is not surprising with up, straight, and parallel. Next slide. And here's where those judgments get us on a bottom line using a high PE of 30, potential return of 17.8%, using the average PE of 22. You get a potential return of 11.2. That's, of course, more the methodology is along the same lines as the value line median return or manifest par, and manifest has a significantly higher potential return based on similar growth and higher profitability and a little bit higher PE, if I recall correctly as well. Next slide. This is a Value Lines assessment in the latest report a couple of months ago. Highest timely ranking, and you could see they're essentially saying that Taiwan Semiconductor has strong price momentum. I'm not a momentum investor, and in fact, frequently momentum will cause me to pull away from a company, and looking at 52-week lows like Hugh's talking about and that sort of thing. But when I do find a company that long range outlook looks solid and has solid momentum behind it, that's kind of the best of all worlds, especially when you add in the very strong financial strength and safety, as Value Line mentions. Again, the risk is geopolitical, and I guess geopolitical would include tariffs as well as China looking over the border at Taiwan. Next slide. And here's just the final slide that I had. This is kind of the manifest depiction of that combination that I mentioned of strong price performance or momentum, but also long-term performance. You could see going back a year and a half, a year and 3 or 4 months to the end of 2023 is about when the projected return was about the same as it is now. And you can see what has happened to that price since the stock relative return was at this same level as it is now. So again, I think the potential for Taiwan Semiconductor is very good, and I'm adding another 1,000 to the portfolio.
Cool, thanks, Si. That's an interesting way to look at that. I mean, basically says that the fundamental improvement is in line with the stock price. We don't see that all the time for very many companies anyhow.
And no, we don't. I kind of was fascinated when I saw that. It's a little bit different way of looking at the price follows earnings follows sales that we sometimes look at. So
good stuff. Thank you, sir. All right, I'm going to talk a little bit about, okay, this was last week in the stock market, the last 4 bars on the right, and it was not fun. Friday, got a few emails from some of you out there, and Friday it could have been better, but it creates opportunities. And here was my look at what's going on. Anytime the stock market drops a whole bunch, when there are red banners on CNBC. First of all, I don't watch CNBC, so Ken has to call me and tell me when the banners go up. When the banners go up, this is the thought mode I go into. And I didn't need bail money last week, so I do have that going for me. But basically, want to go out there and look for companies that are beat up, and kind of in keeping with the Hugh McManus Lynch theme of not necessarily momentum, but looking for companies that are firing on most of their cylinders, but have been beat up price-wise. A relative strength index below 30 is a potential worthy study. So a few companies got unearthed by this. Globant is another one of size information technology consulting firms. That one caught my attention. I did talk about that one at a panel discussion back during COVID. This one, NerdWallet, came up during Kathy Wood's big ideas for 2025 presentation. They're actually going to do a webcast tomorrow afternoon. I may tune in on that just to listen in on some of the fintech component of that program. But you see other companies which have been presented here. Some members of the roundtable already. Deckers and Tracks. Of course, I'm very familiar with Booz. So kind of an interesting list. And then I remembered I have a tool called Manifest where I can simply ask 2 questions, and this literally takes, I said 15 seconds this afternoon. It's actually 5 seconds. You just say, I want to rank above 97. This is what the rank is, the combination of the quality and the return forecast. And I want an RSI under 30. Boom, that's what this is. And this is a pretty good list of companies to study from top to bottom. A number of companies there. Some of them do have issues that you, as you dig into them, but I'm pretty comfortable studying just about all of them. I was attracted to a number of them, but I settled in on Powell. I go back to Betsy Will's wonderful presentation of Powell in this concept of a company that benefits across the spectrum of companies that are putting in equipment for data centers and energy production complexes all around the world. And Powell basically does that. The company has really been hammered. We're going to take a look at the impact on their stock price, but that's the one that kind of captured my attention. A lot of times what I'll do is build a short list based on the findings of those screens and just put them on a dashboard so I can look at them side by side, and Powell basically rises to the top of this list of potential. So I did think about Novo. That also has been beat up pretty good here lately, but featured Novo a couple times in the past, and United is also an attractive study. Maybe this is one of those loathing moments, not major league loathing, but there certainly is some animosity towards United Health Group, and that they've been getting beat up quite a bit. Novo is just Novo. They're in that market where there's a lot of competition, and it is interesting to see this one prop up here. We don't get a look at that one very often. So here's Powell. Not going to read that to you, but basically they make the stuff that's shown in the picture. Comes right down to electric utilities, factories, industrial plants. They basically make the equipment that handles electricity. Think of it as the circuit breaker in your house on mega steroids. That's what they make. Lots of copper, lots of electrical type stuff. Yeah, I've underlined the stuff that would align with the concerns and opportunity in data centers. And that's basically what Betsy was looking at over a year ago as she became interested in this company. They're very well respected. Here's just a quick look around the park. Back at the end of December, this company was at 257. That was down from 365. They reached a 52-week high of 365, so they came down to 257 on December 20th in the value line report. They have since dropped down to closer to 170. So a rather dramatic change. So that means that these numbers here are NMF, We'll just cross them out because they're based on this price. Okay, so we just ignore that on the current. That's only a month old, everybody. So a month old value line sheet, maybe a couple extra weeks. These are still valid though, just for a general purpose. Growth rates in the teens. This is an important one here, cash flow, but revenues 10, 12, 15. You kind of get a feel for that. And with the price back down at 169, 170, pretty close to the fair value, that suggests that a fair value at Morningstar, when you're near the fair value price, you're around a 10% return, roughly, just to give a frame of reference. Here's some other look at the analysts who are reviewing the company. They see earnings growth, at least for the next year, in that mid-teens range, 15 to 16%, low teens for revenue. And you can see they are fairly sparsely covered by analysts. So we have to add Betsy Wills to this list and get those numbers up. So that gives you kind of a framework as to what's going on. How bad has the price drop been? Again, 365 right here. And the company has, or at least the stock price has really dragged back. They do have a strong inventory or backlog of projects and activity. A lot of the concern here over the last couple of months has been over the DeepSeek and the AI turbulence. Microsoft has either postponed or canceled a couple of their power production contracts, which could defer or delay some of the activity for Powell. So these concerns are definitely weighing on the company. But I would go so far as to point out, and this Seeking Alpha article covers it pretty well, the data center type power production facilities are probably less than 20% of their total business activity. They do more with oil and gas. That's what's shown in the picture there. That's a refinery. And so they do a lot of other stuff. So the impact on Powell with respect to the data centers being slightly delayed is probably being, as Hugh said just a few minutes ago, it's not as bad as it sounds, is what will ultimately come out as this unfolds. So let's take a walk through the company, take a look at the business model. Here is the sales trajectory for the company. You can make a case for anything between 9 to maybe 15%. I would point out that this activity on the far right-hand side is more relevant. That is a growth rate in that 14% range. So this makes sense to me at this point. Their profitability has been greatly bolstered by some of the stuff that they've done. They have re-optimized the company, reconfigured a bunch of stuff, taken some cost out of the business at the same time that they were hit with this avalanche of opportunity with the data centers and a bit of optimism for the oil and gas production industry, which they also serve pretty heavily. So the big question will be, can they stay up here? Can they stay up here? I don't know the answer to that, but all signs are that those areas are pretty vibrant and sustaining for the next several years. I suspect that they probably can stay at those enhanced levels of profitability using 13.5%. That definitely reconciles fairly well with this image. So that makes a lot of sense to me. You can see value line checks in at 11 to 12. Okay. Whether or not they can continue this is the question. But they're somewhere in that range. How about the PE? The PE, again, this is an economically sensitive cyclical company, so PEs are going to be all over the map, very much like some of the other companies we've talked about here tonight. But I can get my arms around 18 looking at this picture. Can make a whole lot of sense. So with those assumptions for that sales growth forecast, that projected profitability in that PE, you are left with a projected annual return in the high teens. That is very attractive. Here's a look at the bigger picture. One of the major things that I think is kind of cool about the company, because they are potentially very capital intensive, they not only have no debt, they have as much cash as total liabilities. Think about that for a minute. I mean, no debt, no long-term debt. But not only that, you don't see this with a lot of companies. Usually companies have a lot of current liabilities and that type of stuff. They have enough that they can literally pay off all of their liabilities, not just their debt, their liabilities with the money that's in their wallet or checkbook. So that's kind of fun. Multi-year high for the company when it comes to the return forecast. And here's a condition that I'm noticing more and more with companies that seem to suddenly thrive with respect to operating results or their returns. This breakthrough of the quality trend line, basically breaking through and going up. Something I want to spend some time with and understand a little bit better, but pretty solid stuff going forward. Yeah, it's been crunched, but pretty solid. Here is a description of that overall picture. Think about adding another California to the electrical grid. You're talking about adding, basically, if California were a country, it would be the 8th largest financially by their GDP in the world. So that's a pretty good chunk to add to the electricity picture. And then on the right, Robin was asking about AI. One of the things that you can do as an investor out there, everybody, is check out Perplexity. Just Google the word Perplexity, and it's actually a search engine on steroids. It's a form of artificial intelligence. I just asked it, what is the outlook for Powell Industries? And this is the answer I got back. A little generic, but this stuff will get better with time. And it does go so far as to explain, first of all, they're in a bunch of stuff. First of all, that's a positive. But some of the threats and some of the pressures that they're into, and obviously the deferral of those projects is a consideration. Notice they mentioned the strong balance sheet and everything else. So again, here's a pretty good summary. A lot of strong positioning and opportunity, but they are, as always, they're always going to be vulnerable to those economic challenges as they come and go. So with that, Ken, I would like to add $1,000 to Betsy's position in Powell Industries. And with that, I think we can go to poll. If Ken is still awake and with us. Ken?
I'm still here, but I have lost the poll, Mark. I don't know what to say. Yes. If you can occupy about 2 minutes, I can create it again real quick.
Okay. I'm not sure.
Can neither of the two in the poll we can release, or are those old ones?
Those are old ones.
Okay.
I've lost the new one.
Okay.
Give me just a moment here real quick, okay?
Any questions? Are you seeing anything in the questions tab, Kevin, that we can tackle?
I did. We have, Nick was asking us about Norva Nordisk, which isn't in our stuff, but they were, let's see. He was saying in the back room, when you get to the presentation on NVO, I noticed that there was a jump in their debt since 2024. If the presenter could address a sudden increase in their debt, I'd be grateful. Thanks. I was just looking at it. They made a huge acquisition of Catalent for 16 billion with a B. And my guess is it probably was that, but I don't own it and I don't follow it. So maybe someone else in the back room. I first think of Hugh is maybe you could ask on that one.
Hugh probably has some insight. I can also chime in with, I'm aware that they have added manufacturing capacity. So they probably did have some CapEx projects that could have generated more debt in addition to that merger/acquisition. Hugh, do you have any comment on Novo?
And the whole CRO, CDMO / type market?
More the debt. How come their debt has just sort of jumped?
Yeah, I'll check into that, but everyone is investing right now in productive capacity.
Yes.
Which is expensive, especially when everyone else is doing it. And but the expectation is that they'll get a return on that. Right now, people are they're holding their breath a little bit for AI because there are some really interesting molecules being created by AI, and they're starting to go into the clinic. It seems that so there's one company I know, for example, that has developed an AI model that they believe, and the data thus far would support this claim, they believe that they can predict the outcome of the clinical trials and accurately assess the sort of patient that should be in the trial to maximize success. So much so that they're speaking with organizations, I'll throw another Lloyd's of London as an example,
Okay.
offer insurance for clinical trials. So now they're able to, they claim they are able to predict the outcome with relatively good accuracy. And for 10%, maybe, or 15 or 20% of the cost of the whole trial, they will insure it so that if they're wrong and it fails, then you get all your money back. Now, that would be quite the game changer, and a lot of capacity would have to come online if it's accurate and works.
Sounds like a form of
But
monetizing.
it's all of these novel molecules that are coming down the pike, it would appear, could drive it. You know, it's kind of a very interesting time.
Mark, I have located the polls, so if you want to wrap this up, I can launch the poll whenever you're ready then.
Come back to the subject. Go ahead, Ken.
Okay, here it is. And we'd like you to pick one of the three companies to include an extra $1,000 in. We'd love to have 80 or 90% of you voting. We just topped 60% voting. We just hit 70. We just topped 80. Can we squeeze out a few more votes, folks? If you haven't voted, it doesn't cost you anything. Just click it and we'll be set. Okay, I'm going to close the poll down and I'm going to share the results. Okay, and we're going to add another $1,000 in MedPace holdings. Powell was second, Taiwan Semi was third. We have 2% of the audience that doesn't like any of them. So.
Might be a fascinating conversation with those 2%ers out there.
No, that was Hugh's vote.
Oh, okay.
Anything this month.
No, I wouldn't accept my click.
Let me hide the poll mark and you can continue now, okay?
Okay, so I think that wraps up the conversation on Novo. I will point out that they have, within the last couple of weeks, pointed out that they have achieved enough production capacity. And Hugh, you can probably explain how this works, but Hims and Hers is putting out a product using the compounder exception, basically kind of a generic model is the way I would sort of describe it. And that puts, at least for that product, for the GLP-1 product, that puts Hims and Hers out of it, right? Within a certain amount of time?
Yeah. We'll see what happens there. So things are fluid at the moment, but yeah, exactly.
Yeah, just there was an update because Hims and Hers reported today.
Okay.
Their CEO, and who knows how viable this is. Their CEO discussed a strategy of compounding dosages that Novo isn't making and calling it a personalized approach.
Okay.
So who knows? There's and that kind of, it's meant to bypass the FDA mechanism, but I don't, there's no other mechanism I think it's leveraging, but I don't think they've given up the fight yet. Of course, they had 20% plus drops in the last few days too, so I guess it might be existential for them.
Talking about Hims and Hers, right?
Yeah, Hims and Hers, yeah.
All right, so we'll go ahead and close the program down, and let's stick around for questions. This is your reminder that you can access the presentations on YouTube. Just go to YouTube and enter Bull Sessions or Roundtable. You'll find them. Robin Hamilton, this is that presentation that includes a couple of artificial intelligence demonstrations, and might be worth taking a look at. Like I said, the first 20 minutes you might want to skip. And let's go ahead. Ken, why don't you take a moment and describe what you and I are going to do this weekend, just in case somebody is interested?
Yeah, just real quickly, we're going to offer 3 classes. They're aimed at beginners, true beginners, especially class 1 and class 2, using the BI Core SSG tool and then transitioning to the SSG Plus. The third class is meant for beginners and folks that are maybe a little bit further into their whole investing journey and would like to learn a little bit more about portfolios, how to create them, and then a little bit of basic portfolio management. We'll be extending this class and offering some more classes on portfolio management in the future, but this is kind of a beginning portfolio management class as well. If you go to Manifest Investing under the Events tab, click that Events tab. You can find URLs where you can register for 1, 2, or 3 of these classes. If you go to the betterinvesting.org site, look for the Mid-Michigan chapter under chapters, and you'll find links to these 3 classes there where you can register as well. Again, class 1 and class 2 are for true beginners. They're going to be the most basic classes. And if you're just starting this journey out with our tools in Better Investing, these are great classes for you to get your feet wet.
And Ken, there's no truth to the rumor that these are based completely on Portillo's hot dogs, right?
No, in fact, the 2 companies that I'm using for examples, neither one of them sells hot dogs, okay?
That's outright heresy.
Yeah.
Go to your room. Bunch of stuff coming up. Ken just described the March 1st program. Ken and I are both going to be in Raleigh, North Carolina on March 8th. We're looking forward to that. The title is Successful Investing by Association. The audience will be a collection of people from the American Association and the National Association. And we've had a pretty good response to that in the past. We'll tell you more about that a month from now. The March Roundtable is on March 25th. We do have a program coming up in April or May with the Southeast Michigan chapter of Better Investing. A quick reminder that we will be doing the April Roundtable with the St. Louis gang, Candace Baker, Jerry Wright, and others. And just a note that the National Convention, it's virtual this year and will take place on those 2 weekends in June. And then longer term, I have a date with Destiny down in Atlanta. Hopefully, Cy and I will convene and have some fun with the audience in Atlanta in August. Cy, I'd appreciate it if you could keep the temperature down that time of year. Do all you can, man.
They're very hospitable, Mark, and you'll be comfortable, okay?
I'm sure you'll be just fine, Mark.
All right.
Just as long, maybe if the Cardinals are not in town that weekend, which I don't think they are, but
we need to do better planning and make sure we can make that happen. Heat is not a problem for that picture, of course, and we'll pretty much just leave it with saying good night, everybody. And we will stick around for answer any more questions. It's a pleasure to have all of you here, and good to hear from Hugh again. And again, best wishes and better investing to everybody out there. Thanks, everybody. We'll stick around.